everyone. Welcome. Andrea over here, as usual. It's either me or Stuart, right? So, a technical analysis this time. ADX mainly. We're gonna touch a bit parabolic SAR since an easy busy and it's a good combination with ADX, but mainly on the webinar that you have registered, it's all about ADX. A very, very good indicator if you are trend traders. I have put the handout on. Let me know if you're facing any issues. In the meantime, as usual, I would like your feedback in regards to the audio and to the screen as well, to the visual side of the webinar. This is our email address as usual. Feel free to ask anything you want. I'm here to reply for any help you might need in your trading. It doesn't necessarily need to be about our webinar. It might be something that you're struggling with as traders, or maybe your setup, or maybe your, I don't know, anything. We are here to help, okay? So until I have a feedback from you guys, I'm gonna read out loud the disclaimer as usual, and after I'm done, we can probably start our webinar. So this material is provided as a general marketing communication for informational purposes only and does not constitute independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation of the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our written permission. So guys, risk warning. Trade in leveraged products such as Forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure. So this is our the disclaimer is out of the way. Guys, I would really like a yes and a no in regards to the audio, because otherwise the recording will also have an issue if I don't record for any reason my webinar properly. So I would really a quick yes or a no in regards to the audio and visual stuff of this webinar, just to make sure that it is properly recorded. So until I have a yes. Okay, William, thank you very much for that. So let's move on. This is what we're gonna cover today, a bit of a background of ADX, what it is and how it can be used, different settings, whether it works or not, divergence and ADX, and if we have time, how we can combine ADX and parabolic SAR. Of course, your questions are more than welcome. So before we start, a bit of a quiz, tiny quiz for you guys. I would like to know how many of you have used ADX before, or if you're using it, whether you are using it often or never used it before, and also in which time frame. If you are here with me, I would really like to know if any one of you is experienced in ADX and in which time frame you are using it. So Other than, so no one is really replying. Okay, I'm gonna wait a bit. William doesn't use ADX, found it a challenge to use. Okay, so hopefully after this webinar you will feel like confident to use it. It's not that hard. It's not that hard. We'll go through it today. Okay. Limagacha as well, never used ADX. Okay, perfect, guys. So it helps me to understand how many, whether I should like take it in a more advanced level or not. So good to know. So we can start. And okay, I will avoid spending time on the history of it. Okay, but let's like simply mention, sorry, the ADX is a trending indicator. Okay, that's why I named it that way. ADX is useful for trending, for trending traders, for traders that follow the trend. So it's a trending indicator developed by Wilder in 1971. Mr. Wilder actually created a lot of indicator for us. So I believe is one of the most is the guru of trading, we could say, at least in the indicator side, in the technical analysis side. So so yeah, just back in 1978, he created this tool initially for using it in commodities and daily prices initially. His aim was to find an indicator which he could use for trading commodities in a daily price initially. However, as we have seen nowadays, the indicator can be used for stocks as well, for currency pairs as well. Actually, it can be useful for any kind of asset class. And as well, we can adjust it in different time frames as well. Okay, so but yeah, initially Mr. Wilkes created for trading himself his own commodities. So ADX, where has he derived his name? Is the abbreviation of average directional index. So it's an indicator used in technical analysis as an objective value for identifying how strong a trend is. So it doesn't give you so as you can see, we have three lines. Okay, the ADX line, okay, the ADX is the one with the blue. Okay, so initially Mr. Wilter, what he created was just this blue line. So this blue line shows us how strong a trend is. It doesn't show us direction, it just shows us how strong the trend is. Because if we identify that the trend is strong, it means that it will continue moving on the same direction, right? If it's weak, then it means that it might reverse. But ADX presents solely how strong a trend is. So also, the other two lines is something that Mr. Wilters added afterwards, okay, because he wanted to find more. He wanted to be aware also on the direction of the trend. Okay, so we're going to explain later what these two lines are, but these lines, since the ADX line is presenting how strong a trend is, these two lines help us identify the direction. So that's why they are called directional movement indicators. Otherwise, you might see it as DI or DMI. you can see over here in our indicator, in our MT4, you can see that's a plus DI and minus DI. So it's the directional indicator. So D lines are based on true range and average true range, okay? So with the ADX line, we're going to have the strength of the trend, whether the price is trending strongly. So it can be considered as a good tool for trend traders, even if it's a tool that simply gives you how strong a trend is, and not the direction. And the other two lines, which can be seen if you apply NDX in your MT4, the other two lines will give us also direction. Okay, so let's move on. Whatever you need, feel free to interrupt me. Okay, so yeah, so you should know, guys, that when technicians, you are the technicians as well, right? You're trading based on technical analysis, some of you at least. So you should know that when the technicians look for patterns over time in order to confirm a continuation or a trend reversal, they often use this indicator, the average directional index. Okay, as you already know, there are numerous trading indicators that are meant to confirm a trend. But one of them, and a powerful one, is the ADX. So once the trend is identified, the challenge is to determine the best time to enter or exit a trade, right? Because identifying a trend is not that hard, but identifying when you should jump into the trend or not, that's the tricky part. And that's where this indicator helps you with. Okay, so yeah, so Mr. Wilders, in order to determine the ADX, used this plus directional movement and the minus directional movement, which are actually the indicators created by him as well, and he combined them with NDX. That's why in your platforms, in your MT4 or MT5, you're gonna see ADX line usually plotted in a chart window along with these two lines, the minus DMI and the plus DMI. So if I just put in my MT5, and if I just let me get rid of all these, come on, delete stochastic, delete MACD, delete RSI, delete it. So let me find for you the ADX. Where's my ADX? Should be on the trend tab, the very first one. So you can see that by default is at 14 periods, right? And we have the plus and minus DI lines. You see that? I'm gonna make it a bit thicker. I'll make it blue just to be like, and here is my ADX. Okay, I'm gonna have also a 25 level at 25. Where's 25? Oops, cancel. I will explain why I put the 25 on. Okay, but this is how the ADX is plotted in combination with the minus and plus directional index lines. So it is plotted like that. And if you notice, you're gonna see that the range of the ADX is from 0 to 100. So let me get back to the MT4. Is plotted from 0 to 100. Okay. The reason why I cannot see 100 in this chart right now is because the Aussie yen since 12th of January never went higher than 48. That's why. But if I just see if I change time frame, the range varies, but yeah, it's from 0 to 100. So yeah, this is the scale of the indicator, and it's quite important because by aware of the scale, you're gonna learn how to distinguish between trending and non-trending conditions. So that's why I have put this little table over here, because guys, what should be the value of ADX in order to identify that we have a weak trend, a strong trend, a very strong trend, or an over extended trend? These are the values. This is what you should learn by memory. You should remember always. If ADX is less than 25, ignore completely, find a different asset, because this is a weak trend. So what that means is, it means that you shouldn't open a position, right? Or you should wait until your asset um, um, your ADX actually strengthens significantly. Because if the ADX it's below 25, okay, is below 25, it means that there is no trend. So it's probably consolidating. Okay. However, if the trend is over 25, okay, over 25, then it considered to be a strong trend. If it's somewhere 25 to 50, we have, sorry, if it's over 50, we have an even more stronger trend. Okay. So what that means, that if your asset is between 25 up to 75 or 70, just to be on the safe side, it means that it's a very strong trend. So you can open position if you wish on the direction of the trend. But if the ADX is over 75, then things are a bit riskier over there. So you need to wait for further signs, because over 75 means that the trend is at its peak. It's overextended. So it might need consolidation, it might need a bit of a correction, or it might just run out of steam. So it will possibly reverse in the near term. Okay. So this table is actually the most important thing that you should remember about the ADX. Let's move on. So when ADX line is checked, and you have seen that it's above 25, so you have a trend, so you know that your asset is trending, you need to confirm on which direction, right? So this is where the DMI lines are for. So the DMI lines, if you check your ADX, then you need to check the DMI lines or DI lines. So these are the ones that they will give you more information regarding the asset that you are looking at. Okay, on whether it will continue moving up or down, or etc. So sorry for that. So why is significant to check your DI lines? Because it will give you, as I mentioned, the potential direction of the trend. So we have two lines, right? The plus DI and the minus DI. In my MT4, if you check your settings as well, you're gonna see that the plus DI is with yellow and the minus DI is with, the plus DI is with green and the minus DI, I'm gonna put it with yellow. And let's make it like a stronger green. Okay, here we are. So plus with green, minus with yellow. So if the plus DI, so green in this example, is greater than minus DI, so than yellow, it means that the bulls have the directional edge, so it's a bullish sign. However, when the minus DI is above the plus DI, like what's going on in this weekly chart over here, the minus DI is above the plus DI, it means that the bears have the directional edge. So, as with all technical trends, traders use several indicators to confirm a movement. So you have over here a bearish sign with ADX being weak, so stating that there is no trend, but if there is, it will be a decline to the downwards. And indeed, this looks pretty much confirmed if we consider the candles, because for 4 consecutive weeks, it was to the downside. Okay, but anyway, we have a lack of direction in the weekly chart because the ADX is below 25, and that's pretty much true because we have seen it up and down, and we don't really have a trend over here. If I go to the 1 hour chart just to see what's going on, we have actually a, a bullish signal from the plus and minus DI lines, but ADX at 29, so slightly above 25, indicating that there is consolidation right now in the very, very short term, because also the ADX is pointing downwards. So yeah, you need to check all this and to combine it maybe with something else, um, such as fast moving averages or etc., just to have a confirmation whether your asset is trending, ranging, and in which direction it is trending. So the fast MAs over here, my 9 and 5, have clashed and they point to the left hand side, to the right hand side. So confirm the consolidation that the ADX is presenting to us. So regardless of this example, let's get back to our slides. As I said, if the plus DI is above the minus DI, then it implies that the prices are moving up. And if your index is strong, is above 25 and pointing further to the upside, then you have a strong uptrend. Now, if the minus DI is above plus DI, that's a bearish signal, so the prices are moving down. And if ADX is strong, is above 25 and points further to the upside, then it means that you have a strong downtrend, so it will continue moving further to the downwards. Now, so this is what you should check: the value of the ADX, the direction of the DI lines. So actually, initially the direction of the DI lines. Next, the value of the ADX line, and also the direction of the ADX line. Because if ADX is above 25 and keeps pointing higher, it means that we're going to see a continuation of the trend, either the uptrend or the downtrend, depending of whether the DI lines are pointing to the downwards or they're pointing to bearish or bullish signal. If, however, like in this live example that I have just shown you, the ADX points downwards, so it has detached from 55 lines and is moving down and is actually a breath away from the 25, that means that the trend is getting weaker and weaker. Okay, so you shouldn't really enter the market. That's why you need to check the value of the ADX, check the direction of DI lines, but also check the direction of the ADX line. Because if the ADX is rising, then firstly you have a strong trend, but also you have the sign that it will continue moving higher. Okay, it will continue to move on the direction of the trend. If the ADX is falling, then that means that even if you have a strong trend, the fact that the ADX is decreasing, it implies that the price might retrace or consolidate for a period of time, either for a few hours, either for a few days, depending uh, on which um, on which what kind of trend you are. Now, let's see another example, right? As I told you, hello, hello. Okay, that's good. As I told you, the direction of the ADX line matters, and it is important for reading not solely the strength of the trend, but also whether it will continue in the same direction or not. So, a very common mistake is that a falling ADX line means the trend is reversing. So a falling ADX line only means, actually, I will make it a question. Let me know whether what I have just said is wrong or right. A common mistake is that a falling ADX line means the trend is reversing. Is this sentence correct or wrong? I will wait a bit. Anyone? No? Okay, William replied, but I'm afraid, William, that's a no. What I said is that falling ADX line means the trend is reversing. Actually, sorry, what I said? Yes, falling ADX line. I said that a falling ADX line means the trend is reversing. This is not fully correct. Okay, it doesn't necessarily mean that the trend is reversing. A falling ADX only means that the trend, that the strength of the trend is weakening. But it usually does not mean the trend is reversing unless you have confirmed because of some other signs of a possible reversals. But solely the ADX line, if it's false, it means that the trend of the strength of the trend is weakening. It will also mean that the trend is reversing if you have also other signs that support this possible reversal, such as the direction of the DI lines or your candles or your moving averages, okay? Or a candlestick pattern. If you have more things that confirm this possible reversal, then yes. But solely, if we just solely check the ADX and it's falling, this means solely that the trend, the strength of the trend is weakening. So it means that we might see a bit of a correction, a bit of a consolidation before it continues in the same direction, and so on and so forth. As long as the ADX remains above 25, it is best to think of a falling ADX line as simply less strong, unless if you have other signs, and then you need to reconsider. So this example of here is a fairly good example of a downtrend reversing to an uptrend. So let's take this bit over here. In this bit over here, we had seen the plus DI line crossing below the minus DI. So that was a bearish signal, right? Okay, so at that time, we had also a continuous decline from our candles. So sign number 1, sign number 2, ADX wasn't that helpful. It literally stuck and consolidating at 25, unable to tell us whether this decline that we started seeing was a strong downtrend. Eventually, slowly, the index started rising over here. Okay, they started pointing upwards. So over here, it was the time at which ADX confirmed confirmed that this downtrend is about to continue, and that was the confirmation that we can still enter short because it will continue falling. Okay, the fact that ADX started slowly to rising and started pointing upwards. But you might say, but Andrea, that will be too late for me. You might be right. That's why it's good to combine it with something else. In this case, it will be the parabolic SAR, for example. The fact that parabolic SAR was from here was above the candle, it was another bearish sign. So with continuous parabolic SAR suggesting pressure, we could have entered prior ADX giving us a sign, because we have the DI line sign, we had this continuous decline, we have the break of the moving average, and we had parabolic SAR. So we had plenty, so we didn't have to wait for ADX. Okay, so that's why it's good to combine stuff. Now, at this point, our ADX reached 60. So we're like, okay, still strong, nice, it's staying strong. But afterwards, we had seen over here, you see that, a bullish cross of the plus DI and the minus DI, and the RSI to fall. So that was when we confirmed that this decline that we used to, this downtrend that we used to have, ran out of steam and actually reversing. And another sign was the turn of the Bollingers, of the parabolic SAR as well. Okay, so that was when we should consider closing positions if we had been short, or if we haven't, and to open a long position, because we had a bullish cross of plus DI and minus DI, we had bullish parabolic SAR, and we confirmed a reversal. Okay, this reversal was confirmed, but what was the next thing that we were about to chase is whether this reversal will eventually develop as a strong uptrend. And over here, just few days afterwards, indeed, we were seeing our index slowly pointing to the upwards and sustaining a move above 25. So that was where we got the confirmation that a strong uptrend was developing. Okay, many days afterwards, but there was still a lot of strength. Okay, so if we have a ranging market now, things are a bit trickier over here. Why? Because if we have if we are in a ranging market, we're gonna see our ADX most of the time to be below 25 because of the lack of direction. So the low ADX, sorry, the low ADX, it's a sign of accumulation or distribution. So when ADX is below 25 for more than 30 bars, 30 candlesticks, then it means that the price has entered a consolidation mode. Okay. So price is then moving up and down between a support and the resistance area. So what you can do in this case is, if you want, you can of course trade a ranging market, but you need to um, to uh, um, to consider buying if the asset hits your support, or selling if the asset hits your resistance. From low ADX conditions, price will eventually break out into a trend, right? So, like in this example, if our ADX starts pointing upwards, let's say, let's stick on this example, and with the candlestick, so the ADX started pointing upwards, but along with that, with the fact that the ADX was increasing away from 25, we'd also had a key breakout, a significant breakout of our so far resistance level. So the fact that we had a confirmed breakout away of the resistance levels, but confirmed one, because you see it break it over here, it turns slightly lower the next two sessions, but afterwards we had 3 consecutive candles, bullish ones. So that was a confirmation that an uptrend has started, because it has broken and rejected the resistance, but also we had a rising ADX, suggesting that this trend that has just started is getting stronger, and it will get stronger and stronger. And we had also confirmation from the DMI lines in regards to bullish trend, to an upwards trend. Okay, so you can either in a ranging market, you can either use ADX along with support and resistance levels to identify when the market will get out of this ranging market, or you can use it for identify reversal at resistance areas or rebounds at support areas, or just the direction, let's say. ADX settings. So the default one, what we have seen so far is 14 periods. I rarely change the settings, to be honest, but you can modify it. You need to play a bit, you need to test a bit based on which time frame you are using it. You need to apply it on the default settings. Check your chart, okay, going backwards, and see, does it giving me nice signals? Did he spotted this rebound? Oh, let's see. So over here, it crossed above 25, but we keep having, so a bearish DI, so bearish sign over here. The bullish sign from the DI lines came over here. The index was rising. So yeah, it looks good. It looks good for our 1 hour Aussie yen. If I detect it, let's see whether a lower period will give me better signals. Let's see. It gives me sharper lines. Can you see that? So suggest, okay, we'll keep moving downwards. Then we have a bit of a decline down. So bullish sign, up, correction, up. No. Okay, actually, over here, it picked over here. It didn't capture this. No, for this example, it seems that the default one was quite okay, was a decent one. Yeah, much nicer. So you need to play a bit. You need to play a bit with the settings in order to confirm whether it satisfies your asset, it satisfies your time frame. Because it's not solely a matter of a time frame, it's also a matter of the asset. Because some assets are more volatile than others, right? Also, yen is a pretty volatile asset because it's a yen cross. So Bitcoin is another volatile asset. So it's not only which time frame you're using, but also which asset. So you need to play a bit like I did. I went backwards and checked whether it gave me good signs or not. So play a bit with it. Of course, if you put your settings too high, it will give you less accurate signal. If you put them too low, it will give you fast signals, but not so accurate ones. So you need to find, you need to play a bit with it, because imagine if I just change my index now and I put it in 20, let's say, or 30, I would have missed this reversal, because ADX back then, it was still below 25, saying that we have a weak trend. So I would have probably missed this trend until here, in which it was nearly at its top. So that's why it's tricky. So let's get back to the reset. Okay. Yeah, and combine it with other indicators. Parabolics are suit them perfectly. The usual range used is from 7 to 30 periods, depending on which time frame you are. Play a bit with it, and you might leave, like me, the default ones, because sometimes it is what it is. It works just fine. So I would like to touch a bit also the correlation of ADX with divergence, because why not? It's good to have a sense of the divergence as well. So the series of ADX can also be visual presentation of an overall trend momentum, right? So ADX clearly indicates when a trend is gaining or losing momentum. So are we okay so far? I don't have a lot of interaction and I'm started worrying a bit. Guys, any questions? No? Okay, no one replied. So let's. Okay, that's good. That's good. That's good. So, okay, okay. Thank you for your confirmations, guys. Matthew, Lumakaso, and William. Sorry. So, we said that ADX is presenting the strength of the trend. So, whether the trend is gaining or losing momentum. But what is momentum? Momentum is the speed of the price, right? The speed. So it's good to check a bit whether we continuously have higher spikes. Okay, this is for long trend traders, but if you guys identify continuous, I don't have an example right now. Let me check whether okay, it's not brilliant, but it is something. So if we have, maybe I could I could use this. No, it's not good either. Hmm. Okay, I cannot find. Peaks and you connect them, okay? You connect them. So you will identify whether the momentum, the trend momentum is increasing. Or if you connect, again, the peaks, but by connecting the peaks, you have identified some kind of a decline. It means that the momentum of the trend is decreasing. Why this is significant? Because knowing when the trend momentum is increasing gives you the confidence to let profits run instead of exiting before the trend has entered. So it gives you timing of your exit. If the momentum is increasing, it means that, okay, don't worry, you can stay for a bit longer. You can let your profits run. You don't need to exit the trade right now. But if you see momentum decreasing, then that's an alert that you should exit your trade. So a series of lower ADX peaks, like this example here, because the ADX is strong, remains strong, but we had 1, 2, 3, 4 consecutive peaks that they were lower and lower and lower. So this is a warning that that you need to watch carefully the price action and manage risk, because you might consider exiting your position. So the best trading decisions are made on objective signals, not emotions, right? So if you see something like that, consider the possibility of exiting your trade. Okay. Also, if however your ADX, the peaks of your ADX pointing upwards, pointing to an increasing of momentum, then you don't need to worry about something. It's increasing, the momentum is increasing, so it will continue in the same direction. You can continue running your profits. But it's when you have consecutive more than 3 peaks that they point to the downwards, then this is when you should start checking for an exit point. Now, I will get back here again, because identifying the momentum is not only helpful for identifying an exit, it's also helpful for identifying a possible divergence. So when the price makes a higher high, but the ADX makes a lower high, it means that we have a negative divergence and non-confirmation. In general, divergence is not a sign for a reversal, but it's a warning that the trend of momentum is changing. Okay? So it may be appropriate, if you identify something like that, to tighten your stop loss. If you see divergence, it might be a signal of reversal, but ahead of time. So it's ahead of time. So you shouldn't take any action in regard to a reversal yet, because it's a sign ahead of time. But it's a warning that trend momentum is changing. So you might consider tightening the stop loss or take partial profits. Okay. This is what divergence does. Divergence, it's a sign ahead of time that the trend might correct or reverse or consolidate. Okay, that's why if you identify something like that, divergence is when we don't have a divergence over here right now. Actually, do I have a divergence? Okay, this is not a divergence example, my mistake. But if you a divergence means that your oops divergence will be noticed if your ADX, the peaks of your ADX moves on the opposite direction of your price action. So in this case, our ADX makes a lower high, right? Lower highs. So it points down if we connect them. If over here our price action during this decline of ADX, our price action was moving up, then is when we have divergence. So if that was the case, then you should have either tighten your stop loss, so set your stop loss closer to the price action in order to lock some profits, or you need to be careful to check for further signs, okay, or even a possible exit level for your of your position. But this is not a divergence example. That was my bad. Yeah, a divergence example would have been if, do I have one? No, I don't. Okay. Would have been if, let me check it live, whether we have some kind of a divergence. Actually, we do. I think that will work, just to give you an understanding. Yeah, over here, we had higher peaks on the ADX, but lower peaks of our trend. So we had a divergence. It was a sign ahead of time that this downtrend might reverse eventually, which is what happened afterwards over here, which eventually uh, uh, rebounded. But if you had seen these consecutive peaks with this decline, okay, over here, when you connected the three peaks, you had the final peak, you could have said, okay, this is a divergence. So if you have had been short, you should consider either identifying your exit level, okay, or setting your stop loss tighter in order to lock some profits. Okay, so yeah, because it's about to reverse, so it's about to turn against you. Okay, so also, as I said earlier, declining ADX peaks, right? If the ADX provide consecutive lower peaks, right? It means that the momentum is decreasing. If the momentum is decreasing, then you need to watch price carefully and manage your risk. That's why one possible way to do that is setting your stop loss tighter. If your ADX in the meantime is increasing, if it's increasing like here, then the momentum, it means that the momentum is increasing, so your asset will continue to that direction. So there is a strong trend, there is a rising momentum. So regardless of the correction, it's pretty much telling us that regardless of the corrections, it will continue moving higher. Everything clear? You don't need to wait divergence until the end of the chart. You need to have at least 3 points connected. Okay, so here I had 4, but if I had connect these 3, I would had realized from that point that we might see reversal. So I need to be a bit careful. So it's a sign ahead of time. That's why you don't need to take action right that moment. You need to wait a bit, but you need to watch your trend. 3 connected points are more than enough. Okay. The same with the live example, right? If you notice, I have connected 3 nearly. Okay, this hasn't really touched. The second one hasn't really touched, but it was enough because 1, 2, 3 rising, but I was in a downtrend. So how this is possible? So this was a prime signal that, oh, my downtrend might run out of steam. So the fact that it had failed for 1, 2, 3 consecutive candles to break that support, but instead of that I had a higher low over here, it was a sign that the divergence was correct, and I had slowly started to see an uptrend, which indeed was confirmed with our DI lines as well. Look at that, bullish, oops, not here, here actually, you see? And finally I had the confirmation of a bullish sign along with these 2 consecutive bullish candles breaking my trend line, and that was a confirmation in regards to the start of a bullish trend, which indeed lasted for a long time. It lasted for, let me measure it, 29 days in a row, guys. That was an excellent signal. Excellent. By mistake, I found a good example. So yeah, okay, possible risks. Of course, it's an indicator, is no indicator to limitate the risk, right? So possible risk when using ADX. It can be used only in trending markets, not ranging. If you're gonna use it in ranging, like the example that I showed you earlier, you need to combine it with other stuff, such as actually, what I did before is I had my ADX, but only for identifying the beginning of a trending market. I had it over here, but I wasn't using it in a ranging market. I was having it over here just to confirm whether it will be, when it will be out of this ranging market and will start trending again. So I used it only here when I got my confirmation that it has exited the ranging market and it has started trending. So if you are in a ranging market, don't use it. You can have it below your trend to identify potential exit of the ranging market, but don't use it for trading decisions. In a ranging market, there are other indicators that they can help you, or solely the rebound away from the support or reversal away from resistance, right? So other possible risk. It's good to confirm its um, its information with other indicators like parabolic SAR. I have already shown you how you can use parabolic SAR in combination with ADX, or you can just check for candlestick patterns, or you can chase further confirmation using your moving average. I already mentioned moving average before. Remember in a live example, 1 hour one. Or other stuff, other indicators that you might are using currently. Common mistakes. ADX line does not show direction. I want you to comprehend that. It shows you the strength and the momentum. The direction is something that you will take and you are moving average ages, not from the ADX line. Works or not? Yes, it does. Useful for identifying a trend, for identifying whether the trend is weak, for identifying divergence, for identifying the possibility of a reversal, and also it is brilliant for identifying when to end, whether it's good to enter or not the trend, and when to enter the trend. Then either use pivot points or just connect, or fractals. So for example, over here, let's put it, okay, here. My next resistance, okay, I have pivot points. Give me the next 2 consecutive resistance and the support levels, or you can use your moving averages or your fractals and etc. So ADX cannot help you identify support and resistance levels. Okay? So a recap before we call it a date. Here it is. So now is the time to ask me about to tell me any questions that you have. It's a trending indicator. We have given plenty of examples, I think. So feel free to watch the recording again and again, and feel free to text me, send me an email, maybe making some screenshots and tell me, Andria, this is my setup. ADX was showing this, but it was wrong or it was right. Tell me, send me examples if you're struggling with the ADX. Just remember that in order to enter the market, you need to consider a strong index above 25 pointing to the upwards as well. So the directions should point upwards as well. But also you need the so bullish side. If it's below, like here, 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 then we have a bearish sign. So downtrend. I think it's your end, William. Your end, I'm afraid. Yeah, what else? More examples about DI. Let's check the other one that I had. Oh, I had another one, didn't I? Oh, yeah, here. Other than the fact that it broke in the resistance area, other than the fact that the ADX was keep rising, we had also the DI crossing above the minus DI at that point over here and sustaining this movement to be above the minus DI consecutively. I mean, he was kept above, it was kept above the minus DI line. So bullish, bullish, bullish. That's it. The bearish sign came over here initially when they clashed, but they clashed. They weren't cross. Over here they clashed, but we haven't seen the DI coming below the minus DI. The plus DI came below the minus DI over here. So the green below the red. So over here, let me just strengthen. Oh, I cannot do a straight line. So that sign came over here. So that was, other than they have that, we had consecutive red candles, bearish candles. That bearish sign came over here in April with consecutive negative candles, with lower highs of the trend, but also with a declining ADX. So that was a sign that if we had been long, it's time to exit our trade. Okay. Of course, you can use it for scalping, even though I don't think it will be very, very useful. But yes, it can be done. I think, my dear Jamil, test it a bit because you might consider detecting the settings, because for scalping it might be a bit high. So test it a bit, but yes, it should work. It should work. Yes, Tenel, don't worry. You're gonna have an email with the recording. If not, check your junk folder. Sometimes it's going over there. So yeah, guys, that was our webinar. Hopefully I helped you. Let me know whether there is anything else that I can help you with. But that was it for today. I think I covered everything. We have even found, okay, this parabolic SAR, so ignore it. Today was solely about ADX, but anyway, we have seen a combination of the two. So yeah, let me know whether there is any further questions that I could help you with. Download the handout as well. It's over there. You can have it. If there are no further questions, I will call it a date. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, no questions. Thank you very much. Check the recording again. Check carefully my examples. Try it yourself, and if you face any problem, just take a screenshot and send me at webinars@hotforex.com email address. Me and Stuart will be able to reply you. Okay? Don't worry about it. So thank you guys. Have a great day ahead. Take care. We have, if I'm not mistaken, Bank of England and ECB's tomorrow. Yes, tomorrow. Yes, Thursday. What am I saying? Yes, Thursday. So it's expected to be a very volatile day. So be very careful. Stop loss. Set stop losses. Thank you very much. Bye bye.